Now what we'll do is we'll just have a quick review of what happened last year, what you forecast and what the reality was, and we'll be very strict in assessing whether it was forecast was right or wrong. Then we'll go on to looking ahead at 2025. But we'll go very quickly through last year.
Sure.
Let's look at what the first forecast you made last year. You said incumbent governments will be in trouble. There will be strong anti-incumbency throughout 2024. And in fact, what happened was incumbents won only 1 out of 3 elections. You were right. There was a time just 5 or 6 years ago when 70% of governments were voted back. But last year, only 35%, that's 1/3 of governments were voted back. 2/3 were thrown out, anti-incumbency. What do you make of that? Why?
Yeah, and that's what I said even about the election in the US, which is obviously the most watched election in the world.
Yes.
In terms of the fact that a lot of people are trying to analyze that, is this the rise of the right, like the Trump, what does it signify? And as I said, if you look at the US election too, that of the last 3 presidential elections, the incumbent party has lost. And it's in fact in the first time in US history, at least going back to the 19th century, that this has occurred. That 3 times in a row, whoever the incumbent was has lost the election. And I think that this is a global trend that we saw it in UK, we saw it in other developed countries. The only asterisk I'll put here is that in emerging markets, in developing economies, this anti-incumbency is not such a strong trend, including India, where
Quite right.
You can argue that it was the home of anti-incumbency. This
Yes.
is where the term was sort of coined.
Yes.
But in India, in fact, the anti-incumbency has been a lot less as a factor now. It's become more 50-50, as you and I have discussed.
Exactly.
Like including state elections as well. But across the world, particularly in the developed world, we're seeing that there's a very strong anti-incumbency. And this is happening because, one, economic growth in general has slowed down. You have rising inequality. You have factors such as immigration, which we'll speak about, are playing a role. Yes. But I think there's a general distrust that something has gone wrong with capitalism, that it is not working for the average person, that housing prices are too expensive, education is too expensive for the average person. So I think that there's something that has gone wrong with capitalism. Social mobility, upward mobility seems much more restricted.
Right.
Power seems much more concentrated with a few companies or a few billionaires. So I think that there's a pervasive feeling in the public that the economic system is not working for them. It's sort of rigged against them. And I think that's what we are seeing at the polls now, that it used to be an advantage to be an incumbent in the developed world.
Yes, absolutely.
And
we saw 70%,
Yeah.
And now 35% this year. And that is a major change.
That's right. And it's much worse in the developed world.
Very important point, because many analysts in India still feel India is an anti-incumbency. But we've had, since 2002, 88 state elections, and guess how many incumbents have won? 44.
Right.
How many have lost? 44.
Exactly.
50-50.
50-50.
And even in the Lok Sabha, 2-2, and then the last one is half-half.
Yeah.
So it's like, and it's no longer anti-incumbency in India. That was this thing of the past. So what the world does today, India did a long time ago, right? Okay.
Yeah. Well, let's see if the world moves on back to being pro-incumbent. But I think that in this anti-incumbency in the developed world, US, Europe, Japan, it's a major trend. So if you're the incumbent, the odds are that you will lose.
Okay, let's move on to the second thing that you forecast, that politicians versus investors. That investors are worried about governments overspending and they're causing a rise in interest rates. And look what happened. You were spot on. Global interest rates rising throughout 2024. They went from 4.6 to 5.1, which is significant.
Yes.
Because
most people expected interest rates to decline. I think that you should. It's very important to map this against expectations.
Expectations, exactly.
So, expectations were that interest rates would come down. That the Fed was going to cut interest rates. Other central banks would cut interest rates. But this is the first time I can remember in history that even though central banks have been cutting short-term interest rates, long-term interest rates have been rising. And that's because I think investors around the world are getting much more concerned by the amount of government spending that's going on, with the fact that inflation has also not been fully brought under control. I think those are factors keeping long-term interest rates high. And that's what I spoke about last year,
right.
That there's growing tension between what investors want and what politicians want. For politicians, when they're facing anti-incumbency, the easiest thing to do is to go and spend more,
Right.
to have more giveaways, right? Because it's very easy to spend other people's
And that's
money.
what investors were worried about, and that's what you talked about, and that was spot on.
Right.
The other thing you just mentioned, and you had talked about it last year in the forecast for 2024, is that backlash, there'll be a backlash against immigration. And in fact, anti-immigrant sentiment, your data shows, has surged. If you look at 2020, about 28% of people said immigration should come down. Most people said immigration is fine. Now this year, 2024, 55% of people said immigration must be cut down.
Yeah, I think there's a lot of support for the fact that any illegal immigrants should not come. There was a feeling that any immigrants were good, especially because in the West, their population growth rate is declining. In fact, many Western countries now face negative population growth rates. So you thought that bringing immigrants in was going to be good. But there's a real feeling that this is disturbing the social fabric of a country, and it's taking away from the opportunities. Some of this may be a bit of a myth. So I think there's a very strong anti-immigrant feeling, and this entire agenda of Trump, which is topmost, is how to control the flow of immigrants into America.
And in that 55% that don't want more immigrants, there are many existing immigrants who don't want them. It's what we call in India train compartment philosophy. Once
Right.
you get in,
Yes.
don't let others come in. It gets too crowded. Keep them out.
A very important point, because if you look at the demographics of the election too in the US, the rising support for Trump among Latin American men and all that, a lot of this had to do with exactly this factor.
Compartment.
That's a new term.
Okay,
Yeah.
the fourth trend that you mentioned was that there'll be no bust, but a slowdown inevitable in the global GDP. A lot of people were thinking there'll be a crash. But actually, in reality, there was a global slowdown, as you said, but no crash.
Right.
So again, you were spot on. We went from 3.1 to 2.7% slowdown.
Yeah.
But no crash. It didn't go to -5, minus 0.5 or anything.
Yeah, but only here point I'll make is, in all fairness, is that the mix did surprise me a bit. That the one economy which we'll speak about a lot in this show, that ended up being much more resilient than even I expected, was the US. The US did not experience any slowdown. Now, I think it's a bit artificial. It's because of too much fiscal stimulus and the AI boom, which we'll speak about. But true, in most parts of the global economy, we saw a slowdown. But I'd say that the mix is very important to reflect upon. That America held up much better, and the economy which did slow down a lot was China, in fact. A big slowdown took place in China. There's a lot of sort of distrust still about the numbers they report and how accurate they are. But there can be no denying that the Chinese economy
had
performed
a very bad year.
Much
and
more
it's
poorly.
something you've been saying for a while, and it's been getting worse and worse and worse, and last year was really bad for it.
Yes.
So 4 out of 4 so far. Now this is the fifth one. The fifth one, you said Europe will bounce back. But in fact, the growth in Europe remained pretty weak.
Yes.
It was 1.1% GDP growth in 2023 and 0.8% growth in 2024. It didn't bounce back, but to be again fair to you, a lot of people expected it to be really doing very badly. Europe was in bad shape and it grew at 0.8%, almost as much as last year. So I would give you 50-50.
Yeah,
half
but
marks
still,
for
I'd
that.
say that, Europe has been really disappointing, and it's mainly because of the two large economies, which is Germany and France.
Yes.
That those economies have done a lot worse than I expected. Germany in particular. Remember that coming out of the pandemic, Germany was seen under Angela Merkel to be the star in Europe, and now it's gone back to being referred to as the sick person of Europe.
Unbelievable.
So the fact that the largest economy in Europe is doing so poorly is something which has really surprised me. On the other hand, there is some hope here, which is that the economies in Europe, which were cast as being these really backward economies, in fact, they were labeled in an almost derogatory way as the pigs, which is Portugal, Italy, Ireland, Greece, Spain.
Yes.
These were economies a decade ago when we first started doing this show, were labeled as the pigs.
Yeah.
Those economies ended up doing quite well, in fact. And this tells you something about how economic cycles work. That when countries are not doing well, and they're under pressure, that's when they carry out economic reforms. That's when they change for the better. That's what the countries like Greece, Spain, Portugal have done. And when countries are cruising, coasting along, they typically don't do anything. They in fact end up overspending, they get complacent, they get arrogant, and
Amazing.
That sows the seeds for a downturn.
And that's one of your fundamental points, that things move in cycles.
Yeah.
And you have to figure out the length of each cycle. That's the key part.
Right. But I'd say
that's what this job is, this program is about.
Yeah, but I'd say so that way I'd say that the Europe point is a bit nuanced, which is the fact that I've been disappointed by how Europe's done, undoubtedly. But the only thing I'll say there is that it's very instructive to see that there is a split within Europe as well. We like to think of Europe as one giant open-air museum, as people call it, but just because there's nothing else going on there. And for most part, that image is correct because of Germany, France, the two largest economies, doing so poorly. But there is a picture in Europe, of Southern Europe, of these countries
coming back,
which have come back. And in fact, Greece, Portugal, these are really the comeback nations of the last few years.
Now, your sixth forecast was that China will be fading. In fact, China's share of global GDP fell. It fell in 2024 down to now 17%, and the US went up. You can see the graph there going apart. That is spot on forecast again. So we'll give you 5 out of 6. 6 out of 5 out of 6. But I'd say that in terms of 5.5 out of 6, sorry.
But I'd say that that's kind of you. But yeah, I think China's troubles are now very well documented, which is that everybody knows what the bear case for China is. We used to speak a lot about what the problems in China are, that they've taken on too much debt. Their demographics are such a problem, which is that the population is actually shrinking now. It's very hard for a country to grow when your population is like shrinking. So we focused on debt, demographics, principally. We also focused on some policy mistakes being made by Xi Jinping of becoming much more authoritarian and centralized. But debt and demographics were the two factors we spoke about a lot over the last few years. And I think that's now well understood. And the Chinese economy was very weak, that even though officially they keep showing that the economy is growing at 5%, if you really look beneath the hood, if you look at what's happening to domestic consumption and other indicators, this is an economy growing a lot less than what a 5% economy feels like. And it's reflected in the mood around China.
Moving on to your seventh forecast, it's again to do with China. You said stars will emerge outside China. In fact, again, it's spot on because foreign direct investment dropped in China and increased in other emerging markets. Just look at what happened in China. Down over $4 billion, down.
For the first time.
Money flowing out of China for the first time.
Yeah.
And then Mexico up, India up, Indonesia, Vietnam. Actually, for Vietnam, a small little country, up 8 billion. So focus is now moving away from China to other countries, at least so far.
Yeah, so in that way, in some regard, globalization is taking a different shape. Which is that at one level, American and Western firms want to reduce their exposure to China, but they're not completely shutting their door on globalization and saying we're going to produce everything at home.
Right.
The labor advantages, the wages are so low still in many of these other countries that they're saying, that, okay, we'll move out of China, but we'll increase our exposure to these other countries. So these are in a way, the beneficiaries, you can say, of this fading impulse from China.
Very, very interesting and spot on there. Your eighth forecast was, and you're 7.5 out of 8 so far. You said that, or you're 6.5 out of 7, now we're coming to the 8th. You said the dollar decline will accelerate in 2024. In reality, the dollar was strong against other currencies. But to be fair to you, it was weak against gold and Bitcoin. So I'll give you half for that. The dollar went up 6%. Gold went up 28% and Bitcoin 120%. So the dollar was not the strongest. You could invest in other areas and do better, but it was stronger than the other currencies.
Yeah, so this I would say, was like wrong in a way because of the fact that I expected the dollar to depreciate because the dollar is very overvalued. You can feel it. You go to America today, and that's where I live and spend most of my time. It is really expensive, the most expensive hotel rates in the world in terms of, even if you were to buy basic stuff in America, it's become very expensive. Housing, food items, it's very expensive. So the dollar seems very uncompetitive and I expected the dollar to decline. But there's still such a rush of foreign investment going into the US and this feeling which we'll speak about, that the only place in the world worth investing in is America, that it keeps pushing the dollar higher.
What do you guys call it? American exceptionalism.
Exceptionalism.
This is an exceptional place in the world.
Yeah, this is a term which has been taken out of a geopolitical playbook that used to be used for the idea that America is an exceptional country, that it's like, in a way, it's ideologically, morally superior, its economic and political model is superior. That's what the term American exceptionalism used to be applied for.
Right.
I think around the world, that sort of sheen is gone. But when it comes to economics and markets, America is still seen as this shining city on the hill. It's still seen that way. And so therefore, it's attracting huge amounts of investment. People keep asking me, okay, if we don't invest in the dollar, where should we invest? And my answer back then, even a year ago, was that, okay, if you don't want to invest in other currencies, there are alternatives such as gold. There is alternatives such as Bitcoin, where you can invest in, and those things did very well. In fact, gold is a very interesting point, which is that if you look at central banks around the world now, they're not holding their foreign exchange reserves as much in dollars. It's still the leading currency. That share has come down, but they're putting more now into gold in terms of where they're holding foreign exchange reserves. Bitcoin is still 1 or 2 steps too far for central banks to put their foreign exchange reserves in. Right. But those two have come up as sort of alternatives to just investing in the dollar. That has happened, but the dollar itself has been unusually strong and something which clearly surprised me.
Strong against other currencies, but weak against the gold. So you may say you got it wrong, but your modesty is the facade with which mediocrity impersonates genuine excellence. So you get half a part. Let's go on to your 9th point. AI stocks. AI is the buzzword of the last, 24 months. But you said AI stocks will get a reality check. In fact, the AI stock boomed.
Right.
Look at Nvidia. It went up 164%.
Yeah.
And all US tech stocks, a lot of it is AI in that, above 36%.
Those are fantastic returns.
Fantastic.
And that's something which obviously sort of I can look back and say of sort of having totally underestimated the AI wave, which is that there's such an, like a race, a gold rush almost, that we need to invest in AI, that's something which has done far better than I expected it to. In fact, a lot of the investment landscape last year was dictated by which countries are doing like AI, and America was the leader in that. And then even in emerging markets, countries such as Taiwan, those were the big beneficiaries of the AI wave. Huge. TSMC is like such a great chips manufacturer. So AI did a lot better than I expected as per that forecast.
Okay, let's move on to your 10th forecast, which is always the and finally type of forecast, that there'll be more cricket and less Bollywood. Bollywood has kind of lost the plot. And look at that. Bollywood box office, including South Indian films in Hindi, are down from 690 million to 520. That's quite a drop. While the value of IPL has gone up. So cricket is just still doing well, except in the recent Australia Test series. That was not our fault. That was biased umpiring.
No, but I'd say that for me, like what's really troubling here, having grown up as a great fan of movies and films, is how poorly Bollywood is doing. And they just can't seem to figure out what's the way out, what's the new plot that they need to do. Because even if you look back, and we keep having these discussions around dinner tables, can you name our favorite movies of the year? Right. And we struggle now to come up with any Bollywood content to say that, hey, this was like really good. There was a time when we'd be able to talk about that this movie was great or that was great. So there's something really gone wrong. The content seems bad and the people are giving the thumbs down. So you have 2 or 3 movies which did really well, giant box office successes. But for most part, most movies did very poorly and are not able to recover the costs anymore.
Okay, quick summary. If you look through them, one, biggest year for democracy. Just focus on 1 or 2 of the 10.
No, I'd say that if you look at the 10, so clearly I'd say that it ended up being a very strong year for anti-incumbency. That I think was very clear.
Right.
But the trends which I did not get right included AI, in terms of how that AI did a lot better than I
would say that's the only one that was out, but the
Right.
others were 50-50. The blues here are the ones you got right. 50-50 are time for euro to bounce back. It didn't fall, but it didn't bounce really. And the dollar decline accelerated against other currencies, but not against gold. So you get overall 80%.